On today's episode, we're going to take a quick look at three stocks, but more importantly, I want to take a quick look at how Meta Platforms is taking employees from the tech giants right now. And I want to share my overall thoughts as an engineer at how this is happening and what it means for some of these big giants. So let's get started. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. So the Wall Street Journal yesterday on January 10th reported that Microsoft in the past year has lost over 100 employees. That is insane. That are focusing in the HoloLens market. That is the virtual reality / augmented reality team. They also, thanks to LinkedIn, one can kind of follow where some of these employees are going. And the report has shown that over 40 of those employees that have left Microsoft HoloLens have joined Meta Platforms, aka Facebook, in their kind of endeavor to grow this metaverse, this virtual reality, and this augmented reality. The report also says that other big tech giants like Apple have also lost some people in their department and have moved into Meta Platforms. Now, how is this happening? And that is very, very important. First, the kind of report mentions that Facebook is kind of paying a heavier price or a hefty price to kind of acquire some of these engineers. But if we take a closer look at their most recent report, which they reported October 25th of 2021, Facebook mentioned that they are going to increase the amount of expenses that they are using this year and next year because they're going to be driven investments in technical and product talent. So what does that mean? They're going to be spending more money on acquiring stronger talent in their engineering force as they kind of push this force into the metaverse, into augmented reality, and into virtual reality. And later on in this episode, I'm going to show how maybe it's not just the metaverse, right? There's so much more with this technology outside of this gaming, outside of this crazy player one, which seems to be almost like more of a fiction world. But throughout the work cases of technological advancement, the technology provided from augmented reality, from virtual reality, can hit so many markets that are being used in today's lifestyle. And I think that is very important to know, right? Because sometimes investors, to some extent, hear the word metaverse and they think it's something fake, something that's not going to happen anytime soon. Yes, the metaverse, like I mentioned, like in Player One, nowhere near, but kind of the tools of virtual reality and augmented reality, which are driven because of the kind of push to metaverse, can be used in real life products right now and are being used in real life products right now. So I also took it upon myself to kind of take a quick look at LinkedIn and see how these three giants are doing in hiring for. So here I'm taking a quick look at engineers in the past 2 weeks of positions opening in Facebook. And here are Meta Platforms, and my apologies for keep switching, their name still confuses me. But here are Meta Platforms. In the past 2 weeks, they have opened up over 668 new positions for engineers. But before we begin, let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. I think that is insane. But if we take a look at a giant like Microsoft, they have over 4,000 engineers looking worldwide. And then if we take a look at Apple, they have over 2,800, almost 2,900 engineers that are being looked at, and new positions opened up in the past 2 weeks. And that's insane, right? And the other thing I do want to say is one thing that I find pretty interesting is even though Facebook has the least amount compared to all the others giants, right? This is less than 1,000 when all the other ones are over thousands, 2,000s, and 3,000s. Facebook does have the most remote work capabilities out of the rest. And as an engineer, I feel like that's a better that's something that would be very important, especially for me. If I was to go back into engineering job, I would personally look for a place that would do more remote and hybrid style opposed to just on site. So before we take a quick look at the three companies and some of their fundamentals, I just want to share my overall thoughts on this. First, I just want to say, from prior experience as an engineer, yes, most engineers leave for more money. Obviously, if I'm going to get paid at another firm, at another engineering place for money, I will move on. But let me just say this, but most engineers and even myself, when I look for a new job, I'm looking for a job in a place that I would enjoy. So obviously them kind of moving into Facebook is definitely good news. It means that, hey, they're paying them more job, but I think it's more important because it means that those engineers are really looking for something in this augmented reality, virtual reality growth, which is what Facebook and Meta Platforms is focusing on. The second thing I do want to mention, right, is I don't know, obviously from outside the engineering workforce, but innovation is driven by talent, right? 100%. When we have technological advancement, it is 100% driven by the team of engineers. So by seeing a nice influx of engineers coming into Meta Platforms, I do believe they are going to start to produce some amazing products in such a short time because of the talent they are requiring. Obviously, the most important thing is, can they keep that talent? The final thing I want to mention before taking a quick look at fundamentals, all these three giants, right, are focusing on virtual reality and augmented reality. It's not just Facebook, right? And this is something I feel a lot of investors just look at. Hey, it's just Facebook focusing on this metaverse. This isn't going to happen. This is not going to be happening. This is a bad investment. But when you have three giants, right, the three giants that are pretty much moving the market right now, especially Microsoft and Apple, when those are focusing dramatically in the virtual reality and augmented reality, that is the future, right? That is where we're going. So obviously this kind of push to the metaverse, to virtual reality, to augmented reality is one that's going to stay. So now, obviously, we want to take a quick look at some of the stocks and just see fundamentals. So first, I just want to see price action. We can see these have barely moved in today's price, even though growth stocks have taken quite a hit. These are more of the giants, right? They haven't really moved. Meta is probably the one that's down the most, down over 13% from all-time highs. Microsoft is down over 8%. Apple is down less than almost 5%, less than about 4.2%. So these have barely moved. Now I want to show the estimate for the current quarter. So this upcoming quarter, what type of growth they are expecting. We can see Apple is not one to expect to grow much. It's expected to grow about 5% compared to the same time last year in this upcoming quarter. Microsoft is actually a nice growth machine, expected to grow over 17%. And then we have Meta Platforms being one of the biggest grower, expected to grow over 18.6%. So we can see all of them are growing at different levels. I'm actually surprised at how much Microsoft is growing and how close it is to Meta Platforms. Next, I want to take a quick look at some of their other fundamentals. So here we're taking a look at cash and short-term investments. The biggest one out of here is Microsoft with over $130 billion. That's insane of cash and short-term investments. But to my surprise, Meta Platforms and Apple sit at similar price. Apple has about 62.6 billion in cash and short-term investments, while Meta Platforms has 58 billion at hands. And this is what allows them to be very, very kind of aggressive in kind of these salaries, because this is a company with plenty of cash. If we take a look at long-term debt, the one with the biggest long-term debt is Apple at 124 billion. Then we have Microsoft at 53 billion. Then we have Meta Platforms at no long-term debt at the moment. So I do believe to this extent, this is why Meta Platforms is allowed to kind of push a little bit more in forms of salaries. If we take a quick look at market cap, right, both Microsoft and Apple are sitting at over $2 trillion. Apple is nearly $3 trillion at the moment. Meta Platforms is less than $1 trillion company, sitting at around 925 at the moment. Now I want to take a quick look at research and development expenses. And this is what I found super interesting. All these companies in the trailing 12 months have spent about $22 billion or so on research and development. And to me, this is, again, a good thing for Facebook. You can show they're really focusing on growing their technology. They're focusing a lot of money in research and development. But remember, Microsoft and Apple are huge monsters. So in any case, I feel like they have a higher ability of turning up that knob of spending a little bit more money. At the moment, they maybe have not decided to do so. They believe this $22 billion per year is enough. But if they ever have to, I do believe Microsoft and Apple have some form of more aggressive ability to turn up the knob. At the same time, we did see Meta Platforms has no debt at the moment and plenty of cash. So I'm pretty sure they can also turn it up if needed. And that's what they're doing right now. If we take a look at trailing 12 months of cash flow from operations, Apple is a beast here. Again, it kind of gives them the ability to turn up the knob whenever they want to increase expenses. Microsoft is not far below at about 82 billion. Apple was at 104 if I didn't mention. And Meta Platforms is sitting at $53.7 billion. So we can see these are all amazing companies in my opinion. And now I just want to take a quick look at EV to EBITDA forward ratios. Right now, I want to say Microsoft and Apple are a little bit more concern or compatible, so they kind of trade at a similar EV to EBITDA ratio. If we take a look at Meta Platforms, it's trading at kind of a cheap levels, but remember, this is nowhere near the size of cash flow from operations as these other giants, and to some extent, investors might not feel as safe. But I do believe from what I'm seeing, Meta Platforms is looking very, very attractive at these levels. I would personally enjoy adding more Meta Platforms here. If I wanted to add into Microsoft and Apple, it would be more of small dollar cost averaging and building over time. I would never bet against Microsoft and Apple. That's not what I'm saying. I'm just saying if I ever want to make a big bet right now, I think at the moment I would make a bigger bet on Meta Platforms than the other two. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.